You're watching the Market Comment for Thursday, March 28th by Haralan Pospisuros. I'm Christina Marujos, and thank you for joining us at XM.com. The US dollar finished Wednesday slightly higher against all but one of its major peers, losing ground only against the yen, and continues to trade on the front foot on Thursday. Comments by Fed Governor Christopher Waller after Wall Street's closing bell added some fuel to the dollar's engines. Waller said that the recent disappointment in inflation numbers confirms the case for the Fed to wait for a while longer before pressing the rate cut button. According to Fed Fund futures, the probability of a June cut slid to around 68%, while markets matched the Fed's projections of 75 basis points worth of cuts by the end of the year. The next big test for Fed expectations and the US dollar may be tomorrow's core PCE index, which is the Fed's favorite gauge. Another round of data pointing to stickier than previously expected inflation could further weigh on the probability of a June rate cut and thereby further support the dollar. Japan's three main monetary authorities, the Bank of Japan, the Finance Ministry, and Japan's Finance Services Agency, held a meeting yesterday to discuss the slide in the yen and suggested they were ready to intervene in the market to stop speculative moves. Dollar-yen was trading in a consolidated manner slightly below 152 ahead of the meeting, with the announcement pushing the price down to 151, even though the pair rebounded slightly later. That said, although yen sellers may be reluctant to push dollar-yen beyond 152, this could still happen if the dollar is fueled by tomorrow's PCE data. Such a break could ring the intervention alarm bells louder. On Wall Street, all three of its main indices closed in the green, with the Dow Jones gaining the most and the S&P 500 securing a new closing record. The Nasdaq gained the least, perhaps dragged down by Nvidia, which closed in the red for a second straight session. More data suggesting that inflation in the United States is proving stickier than expected could weigh on Wall Street, but any PCE-related retreat is unlikely to lead to a long-lasting decline. Gold also traded higher yesterday despite the recovery in the US dollar, perhaps as increased central bank purchases continue in an attempt to diversify their currency reserves. This suggests that even if the precious metal is dragged down by a higher than expected core PCE rate tomorrow, the slide may prove to be limited and short-lived. This was today's market comment. Thank you for watching at XM.com.